As a business owner or employer managing payroll, understanding and correctly handling payroll taxes is crucial. Payroll taxes are not just a business obligation, but a significant part of your role in maintaining compliance with federal, state, and local tax laws. This video will explain how to do payroll tax, focusing on key features, benefits, and costs associated with managing these taxes efficiently. And by the way, if you would like to streamline your payroll and HR processes, make sure to sign up with Gusto. For your convenience, I left a link to their website down in the description of this video. Gusto helps you streamline your payroll and HR processes, and they are the best software out there in the industry. If you use my link down in the description of this video, I'll receive a small commission at no extra charge to you, which I'll be very grateful for. And with that in mind, let's get started. What is a payroll tax? Payroll taxes are the taxes that both employees and employers pay on wages, tips, and salaries. As an employer, you are responsible for withholding federal, state, and local income taxes from your employees' paychecks. Additionally, you must also handle FICA taxes, which are the contributions towards Social Security and Medicare. For your part, besides matching your employees' FICA contributions, you're also required to pay federal and state unemployment taxes. These taxes are essential because they help fund government programs like Social Security, healthcare, and unemployment benefits. Understanding payroll taxes. At the federal level, payroll taxes primarily cover Social Security and Medicare, collectively known as FICA, which stands for the Federal Insurance Contributions Act. You'll often see these listed as MedFICA and FICA on employee pay stubs. While federal income tax that is also withheld goes to the U.S. Treasury's General Fund, FICA contributions are specifically allocated to fund the respective Social Security and healthcare services. Many states, along with some cities and counties, also impose their own income taxes, which are paid directly into their coffers. Unlike the taxes withheld from employee paychecks, federal unemployment taxes are solely the employer's responsibility. It's important to know these details because understanding where taxes go can help you explain the deductions to your employees and ensure transparency. How to calculate payroll taxes. Calculating payroll taxes begins by figuring out the gross taxable wages of an employee. This is the amount they earn that will have income taxes and FICA taxes taken out of it. For example, if an employee earns $1,000 but has $100 taken out for health insurance, their taxable wages drop to $900. You then use this $900 to work out how much tax should be withheld. Sometimes an employee might also get extra money that isn't taxed, like a $200 reimbursement for expenses. This $200 is added to their paycheck after all the taxes have been figured out. Although it increases the total amount you pay to the employee, it doesn't change how you calculate the taxes on their wages. This way, you make sure the right taxes are taken out before adding any extra non-taxed money. Social Security and Medicare contributions. Each employee has 7.65% of their wages taken out for FICA taxes, which is divided into 6.2% for Social Security and 1.45% for Medicare. As the employer, you also pay the same amount for each employee, matching their 7.65% contribution. However, it's important to note that Social Security taxes have a cap, which is set at $168,000 and $600 for the year 2024. This cap means that once an employee's earnings go above $168,000 within a year, you stop deducting Social Security taxes from their paychecks. After reaching this limit, only Medicare taxes continue to be deducted without any cap. Additional Medicare tax. For employees who earn more than $200,000, there's an additional Medicare tax of 0.9%, which employers do not match. This additional tax is crucial for ensuring that those with higher incomes contribute a fair amount to the healthcare system. The real value of effective payroll tax management. Managing your payroll taxes effectively is crucial because it helps avoid expensive penalties and ensures that you follow tax laws. When you calculate and pay these taxes accurately, you prevent mistakes that could cost you money. Both paying too little and paying too much tax can have negative consequences. If you pay too little, you might face audits, which take up a lot of time and can be very stressful. On the other hand, paying too much can affect your business's cash flow negatively. Benefits for business owners. Handling your payroll taxes correctly does more than just keep you on the right side of the law. It also helps your business run smoother. By staying current with tax laws and keeping accurate records of payroll, you avoid potential fines and penalties that come from tax errors. This not only boosts your business's stability, but also supports your employees by ensuring their paychecks are correct. Accurate payroll processing shows your employees that you are dependable and committed to their welfare, which can improve morale and loyalty in your workplace. Plus, it leaves you more time to focus on growing your business rather than fixing mistakes. Example scenarios. Let's look at a couple of examples to see how payroll taxes might be calculated in real life. Suppose you own a small business with 3 employees who are paid bi-weekly. Employee A earns $1,500, employee B earns $1,200, and employee C earns $2,000. To calculate the FICA taxes for each, you will take their gross wages and multiply by 7.65%. So for employee A, you would withhold $114.75 from their wages and also contribute the same amount as the employer. This process would be repeated for each employee. For a highly compensated employee earning $10,000 biweekly or $260,000 annually, you'd follow the same process, but keep in mind the wage base limits. Once this employee's earnings exceed $168,000, you stop withholding Social Security taxes, but continue with Medicare contributions. When their earnings surpass $200,000, you start withholding an additional 0.9% for Medicare. Handling self-employment taxes. Handling self-employment taxes involves a different approach compared to taxes for traditionally employed individuals. If you're self-employed, you're responsible for the entire 15.3% of Social Security and Medicare taxes, known as self-employment taxes. This is because there is no separate employer to share the cost of these contributions. Paying this tax is essential as it allows self-employed individuals to contribute to Social Security and Medicare just like employees who work for a company. It's important for self-employed persons to understand that they must set aside this amount themselves to stay compliant with federal tax requirements. Understanding how to do payroll tax correctly is not just about compliance. It's about ensuring the financial health of your business and contributing responsibly to the wider community and economy. If you're unsure about handling payroll taxes, consider using professional payroll services like Gusto. These services can help ensure accuracy, keep you compliant with updated tax laws, and let you focus more on running your business. So, are you ready to streamline your payroll and HR processes? Then discover Gusto, the online platform designed for startups and small businesses, making payroll and benefits administration effortless. For your convenience, I left a link to their website down in the description of this video. Now, if you sign up through my link, I'll receive a small commission at no extra charge to you, which I'll be very grateful for. I hope this video was helpful. Thank you so much for watching. Till next time.